The Bitcoin halving is over, so what is going to drive Bitcoin and cryptocurrencies into this next phase of the cycle? If we still think there is further upside to go for Bitcoin and cryptos, what could it be? Today's video, let's have a look at some strong altcoins. We got fantastic feedback from you guys in the last video as I went through a mini lesson in how to find those strong altcoins and how to avoid the losers for this next stage of the cycle. So I got plenty to cover as per usual, and you guys are really holding up your end of the bargain, smashing the like button as I try to beat that YouTube algorithm, that YouTube audience that prefers the warning crazy titles and crazy thumbnails. So much appreciated to you guys for sticking with us, watching the channel, sharing the content, hitting the like, you get the deal, and replying to the questions about what you want to see in the content. So with that out of the way, we've got Bitcoin to cover, we've got USDT dominance to cover, we've got the total cryptocurrency market cap, and of course, some strong altcoins. Roughly about 6 of them that have all got different patterns and something for you to be aware of for your own portfolios moving into this next stage. I think most are going to miss the bottom. That typically is how we get to these really strong peaks to the upside and then the corrections, but more on that in a little bit. Let's get over to the traditional markets. They closed at the end of last week, so a quick update there, and then we get on to Bitcoin and cryptos. This is the important stuff here because this is what is going through the psyche of the people out there. Tech stocks plunge. So we saw Nvidia down amid geopolitical and recession fears. I mean, if you've been watching the news for more than 6 months, at least the financial news, you've seen this come up almost every other week. There's geopolitical tensions, there's always recession fears. Eventually, we know it'll be right. The main point I bring this up is so that we can get desensitized to these headlines. Onto BTC news and crypto news. Bitcoin completes 4th halving, ushering a new era for BTC. It's happened. We got to that halving point. Nothing went wrong. And now the miners are earning 3.125 Bitcoin every 10 minutes rather than the 6.25. So what we saw end of last week, it was roughly about $400,000 as a reward, and now that reward is roughly about $200,000. Obviously, with Bitcoin's price, it's going to fluctuate. The main thing that happened here is that you could see that the miners were selling into the lead up of the event, so they've been net sellers, and also the ETFs were net sellers leading up to that as well. It's not the ETF company per se, it's the people who are buying, the investors who are buying within the ETFs. So when people point to the ETFs and they say, BlackRock's not going to let this happen, BlackRock's not going to let the price fall, it's not up to BlackRock whether the price goes up or down. I know it's hard to believe. It's crazy to think that they don't have that much control, but at the end of the day, their business model is fees. I don't know how much more simple it can be. If price goes up and people buy, they're going to have fees. If price goes down and people sell, they're going to take fees. So their business model is about creating as many products as possible that people want. It's the same thing when you go out to dinner. How many different options can you have on the menu that you really like and you really want to try? How many different types of drinks? Whatever it might be, how many different products people want to buy? Forget the stupid narrative around BlackRock's not going to let the price fall, because this happened 2022. Michael Saylor's not going to let the price fall under his average price, which was $30,000. So if you haven't been in Bitcoin for over 2 years, it's the same stupid narratives that go over and over again. People get sucked into it, and then you see the price fall. So obviously Bitcoin went under $30,000 and everyone thought Saylor had to liquidate. It didn't happen. That's the rant, just so that you can be filled in on history, because what we know from history is people learn nothing from history. So hopefully we are all learning something from history. Anyway, on that point with ETFs creating products that investors might want to use, and then you'll figure out whether they do want to use it with the use of that product, Grayscale's planned mini Bitcoin ETF will have a 0.15 fee. So their current fee for their GBTC is 1.5%. This is going to be 1/10 of that. So it'll be the lowest among spot Bitcoin ETFs. They're going to take 10% of their GBTC and create the Bitcoin mini trust. So their BTC, they got away with having a fantastic ticker symbol for that. And the fees are going to be 1/10. So potentially, I don't know, this article didn't say it, but the mini trust is going to be 1/10 of 1 GBTC, and 1 GBTC is not 1 Bitcoin. Doesn't matter. The point being here is that they are creating more products, which potentially will drive more people into the industry. This is the sort of way that I like to think about the fundamentals of any sort of investment that I am looking at. Not necessarily BlackRock and Larry Fink are not going to allow the price to go down. Like that's really stupid, basic sort of thinking. Have a think about what the investors are wanting to do and whether we start to see any sort of drive from the public to adopt these other products and whether they get super interested in it. That's my 2 cents. Take a read of this, save it if you have to. This is what we're anticipating will happen over the coming months here. Michael's got a prediction. So my brother here on X, the unrest in the Middle East. That's basically the main thing that I'm seeing going on at the moment. The main narratives in the headlines, at least for the stock markets now that we've seen them down a little bit. The Middle East will largely stay in the Middle East. So the unrest for now. This is looking over the span of 3, 6 or so months, okay? Not over the next 2, 3, 4 years. For now, just looking at this around that 3 to 6 months. Keep that in mind as we continue on here. In anticipation of World War III skyrockets, which is based on the 1% of the knowledge and plenty of misinformation they have gathered from mainstream media. So the masses will get distracted while simultaneously becoming geopolitical experts. We've seen that before. It happened in 2022. Everyone was a geopolitical expert at the time. Asset prices form another macro higher low, providing one of the best buying opportunities of the year, yet most people missed it because they were distracted. And the distractions come from a lot of these sorts of headlines here, which is why I focus so heavily on it at the beginning. Before I get into Bitcoin and cryptos, at the end of the day, this is the difference that you get from my channel, Home of Macro Cycle Analysis. You get the deal, okay? So that's my rants again. Most people miss it. Order's restored, at least on the surface level, because things can escalate in years to come, but at least for now. And eventually everyone starts playing catch up and they try to keep buying the dip on the way up. They buy and happily paying a significant premium because everyone else is. That also goes hand in hand with the short term here that Jason Shapiro is talking about. This is a fantastic channel. It's a few minutes in the morning. It gets you thinking differently to 99% of people in the entire financial space. I highly suggest subscribing. And if you do subscribe, go to his comments and say Jason Pizzino or Pizzino sent me here, because it's great stuff just to hear it, right? The dip happened on the stock markets, or it's happening now. But on the way up, everyone was hoping for a dip, trying to get into the dip, and it didn't come. They got 2% dips, as we've covered here on the channel, and now we're seeing a 7% dip, and they're all talking about the market coming up so they can sell into the rally before another move down. And it doesn't seem like the rally has come on this entire move. You can see it's only been very, very minor intraday rallies, and it hasn't seen a rally since, roughly the 10th of April, so nearly 2 weeks ago. And that's essentially what Shapiro's talking about here. I want to buy into the dip, and now they're waiting for the rally to sell into. Well, they never got that dip to buy, and now they're never going to get that rally that they want to sell into. And so it's always seeing what the masses are talking about and then trying to understand what might come next from the market, because typically the masses are always wrong. They are right for a period of time, and that's usually towards the end. Let's head over to Bitcoin on the short term. The 50% at 66K, so this is top to bottom, sliced in half. We had already got one rejection last week here on Monday, came up to 67, rejected, and has dropped from there. Now we're starting to see the market try and claw its way back, potentially putting in some high lows for altcoins. Bitcoin also trying to do the same thing here, but until it can get over 67 grand, well, you've still got the possibility of getting another rejection, which would then potentially turn into further downside and a retest of that 59 to 60K level. Right now, it's still just stuck in this range. So as much as we want to have a crystal ball for exactly what happens and people trying to tell us that this has to pump from here, the chart isn't saying anything. It's just saying, look, we're going on a rally, but unless we get over 67K, which was the previous rejection, previous swing top, 66K is the 50% level. And for the entire range here, it's 66.7, so 66,700. There's really nothing to say that we must go up from this point, okay? So that's on the short-term basis. On the weekly, we had the lowest close since the last week of February, which of course closed in March, but basically nearly 2 months there, it's been the lowest weekly close. The good news to this is we haven't seen, or at least for the bulls, we haven't seen any sort of major move to the downside. And that leads me just briefly to what happens if we were to see some major moves to the downside. From the low to the next support level at roughly 56K, there's only about a 5.5% drop. And to that zone of 50 to 53K is about 11% drop. So provided you have something planned for a possible drop at those levels, like we talked about in the previous video that one of the subscribers had pointed out how to DCA into this, then you're going to be fine. So it doesn't matter if the market goes up or down, you've got a plan for either direction. Because some people just want to know it has to go up, it has to go down. That's not what trading's about. I think it's all wishy-washy. There's no one knows what's going to happen next. You just have to have a plan for both sides. It's that simple. So 67K, if we can get above that, or if Bitcoin can get above it, probably some better things ahead for cryptocurrencies as well. And then that would say that it's swinging the probabilities in favor that this is going to be the low at 59K if we start to consolidate above 67. All right, so enough said on the short term for BTC. In the longer term perspective here, fear and greed index is still on the rise. It has bounced out of a reading of 57, which is essentially neutral, that came in around the lows of last week. And now we find ourselves back at 73, which is essentially greed. So I've pointed out before that this is the least feared bull market of all time, or at least of the reading here going back to 2018, because in we've only got that previous bull market, right? Those cycles saw multiple occasions where the market sentiment dropped underneath 50 or roughly 40, which showed signs of fear and extreme fear. Whereas this cycle, we haven't seen extreme fear since the lows of November, which was when FTX collapsed. So like the biggest event that could ever happen in crypto, that showed the bottom of the market. And that was the last time we saw extreme fear. So I'm just a little wary that we haven't had a reset yet. We know from history that the market can remain elevated for several months until we do see a flush out like we saw in 2021. Even that quick flush out in January that brought it back to support at 29K was enough to get it back into the fear. So looking forward, that's the next phase. If we were to break down from 67, came up, tested it, and then broke down, I would suspect that we would then finally get our retest on the market sentiment in the fear zone. So between 25 and about 46 points on that reading there. Okay, so that leads us over to the USDT dominance chart. Just looking at this last week, we looked at weeks to the upside. We're sort of hitting that target now for roughly 3 to 4 weeks to see what happens from there. And in the past, it has hit that time frame when it bounces from the support line and then hits resistance and works its way back down to test the support line yet again, which now leaves us the option of testing resistance further up at 5.5% or coming back down to test the support line again. If the market came down, if USDT dominance came down, that would mean money is flowing back into Bitcoin and cryptos, which would then mean you're starting to see a base form on Bitcoin and cryptos, unless, unfortunately, you started to see it bounce again. This would mean that more money is flowing back into USDT and flowing out of Bitcoin and cryptos. The plus side to that is you would then again start to be able to see which cryptos are stronger and which ones are weaker. Because if money is still flowing in USDT, but some of these altcoins are holding up and others are falling, well, then you're starting to see where the money is sticking and where the money is leaving. That's the big difference here. So that's the good news from this chart. Even though we don't know which way it's going to go, you start to see which ones are going to be stronger and weaker. So the total cryptocurrency market cap was rejected at 50% there. So you can see it right through the middle, but we found some support at the previous top. So roughly 415 billion. Reasonable close here. It was a pretty fearful week the week before. While we remain in this area here, it could be setting up for some bottoming patterns for altcoins, which is now time to get to. Before I do, this is some of the results from our members trading the markets at this point in time. TIA Premium is the place to go. Link to that is in the top of the video description. Sign up to the free report, weekly report, and you'll get your discount on TIA Premium. So congratulations to you guys, are absolutely crushing the gains here while the markets are trending up and down, longs and shorts. So well done to you guys making your big profits over there. Leads us to our cryptocurrency. Sol is an obvious example. I think you probably understand that by now, so I won't spend a lot of time on this. However, I will give you some simple rules and guidelines to have a look at. This is a stage of the market I think we need to have the patience, look for the reversal signs. Do not get bored or scared and leave the market. This is what happens at each of these consolidation periods where the market kind of gets bored and quiet. Average true ranges start to dry up, which is the range of the bars that Bitcoin has seen on the way up. You start to get smaller bars, which means there's less interest in the market. The same thing happened through that 7 months in 2023. A lot of people left, they missed out on the move to the upside and they started to chase their tails thinking, what should I get in now? Should I get in now? It just gets a little bit more complicated. This tends to happen typically around these periods of the year. You have multiple months straight up. We've covered this many times on the channel, so make sure you do hit the subscribe button. I'll go through it in more detail later. This one's more about the cryptocurrencies now, but you could see 4 to 6 months of sideways accumulation after the halving or during the halving period, and then also after pretty significant moves to the upside. And it's happened in each of the cycles. So maybe we're into one of these periods right now. So that is Solana, the macro picture. Now, the rules and the guidelines here: enter positions while fear is dominant, but not too early. So that's looking at point 1, patience, and look for reversal signals. So what are they? Let's not be too wishy-washy here. High risk, high reward, high discipline. You want a dollar cost average or buy the dip, same particular thing, but have a stop loss. If you're getting into cryptos that are dropping faster than other cryptos, probably a good reason they are. And the reason could be that there are less people interested in that crypto. So you want to be where the masses are going, or they will go, and you want to be somewhere where it is finding support. There is smart money, there is something holding up that market while the other markets are dropping. It's very contrary to what new investors look for, new traders, because they think the market that keeps going down and down and down is just going to be a better opportunity because, oh, now I'm 90% from the old all-time high, and therefore I can make more gains to the upside. Completely, utterly stupid. And I see that on Twitter all the time, or X all the time, with these big names out there that are always talking bullish crap. And they're just saying you got to keep getting into these altcoins and buying the dip. It's easier to buy something that has momentum. It's that simple. If you're trying to push a car up a hill, it's much more difficult than just pushing the damn car down the hill. You're going to get better results by doing something easier. So look for the trend there. And if it's not going in your favor, then have that stop loss to the downside. Number 2, let the market prove the move. So this could be the trend confirmation strategy. Option 2 is the lower risk. Is lower risk than option 1, but it comes at a cost, which means you got to buy it at a higher price. So completely up to you which option you use. These are the main things we like to look for: 50% support and resistance out of the accumulation zone, which I've looked at, and first higher swing lows for support. So Solana, it's hit the 50%, but it's not in the accumulation range of the cycle that we're in, and it's above first high swing lows. Now, I go through this in greater detail in masterclasses in TIA Premium. So if you do want to learn about that, there's plenty of content over there. It's a link in the top of the video description. That is going to help you find the strong stuff over the weak stuff. So Solana, strong position. And of course, I'm using the Bitcoin chart because that is really going to show me which coins are going to outperform Bitcoin when the cycle kicks off, or when the altcoin season kicks off again. Next up, Pendle. You can see those higher lows forming. We're on the Bitcoin chart. In this case, it's above 50%. It's above 50% again, and it's above the accumulation range and the first higher swing lows. Render. I'm flicking through these quite quick so that hopefully you can jam them all into your head and go on to do something else with them. Higher lows on the monthly chart here, above the 50% level, above the accumulation ranges of 2022 and 2023. So keep an eye out for that as well. And I'll come back to another point on these declines. Fetch.ai, stuff that maybe you've seen talked about, but you just don't understand why some things could be stronger than others. Again, above 50%, above accumulation ranges. It's above swing bottoms and obviously even smaller accumulation ranges. So it's still all showing signs of being strong. Casper, this one looks a little different. It is still holding up. It's below the 50% levels here. It's above the accumulation and it's above the higher swing bottoms. It is a newer crypto, so you can't expect it to do something that an older crypto has done here. This is doing some pretty strong stuff as it's come through its second cycle. Nonetheless, it's holding up for now, which then leads to the problems that some altcoins could face, Not saying this will face it, but some could. And if they start to break down from here, taking out these lows, this is where you need to implement this strategy here. The stop loss on your dollar cost averaging plan. If you're trying to dollar cost average into something as it keeps dropping, know how and where to put your stop losses that will show you the invalidation points of your plan. That's what I use the Gann swing indicator for. It shows me very clearly where these levels are, where the market will find or should find support if it's going to be strong. And if it breaks those levels, you cut it. It's gone. It's off the plan. Okay. So that's at 5. Now, the 6th one isn't as strong, and this one is ADA. Quite a few people have asked me to talk about Cardano. Bitcoin bottomed here. It kept going, put in another bottom, had a tiny bounce, and it kept going again. It broke another low. Last cycle, Bitcoin bottomed. It broke down, put in a bottom, higher low, and it took off. So this cycle, it can still go up, but you're just playing with fire and playing with a lot more weakness because the amount of resistance to the upside is more than what it was last cycle, and it keeps breaking down in the face of more strength. And this is one of those coins that people are like, well, it's down, 90%. If I go to the USD chart, it's going to be down something ridiculous as well, maybe 80, 75%. And they just hope that it's going to go up and reach those previous all-time highs. It doesn't have to reach the previous all-time highs. There's nothing saying that it must do that. So keep that in mind. If you can get out of those accumulation zones, it's going to be much more helpful. And if it was trading above 50% levels, that's going to be stronger again. So I hope you found more value in that today after the comment from last week. You guys were really interested in that. Major altcoins, I'll continue to follow up with these charts in case they do break down, because at the end of the day, no one knows for sure whether these are going to hold up or they're going to keep coming back down and break some of those lows. So stay tuned to the channel. Thanks again for your support on the warnings and all that sort of stuff and the titles and the thumbnails. I'll see you guys back here at the next video. I hope you had a fantastic weekend. And until then, take care and peace out.